Okay, so this is our simulation for today. So this is related to some deduction. Mrs. Toby, a 14-year-old taxpayer, is an administrative assistant. Her husband and she are cash basis taxpayer. Mr. Toby, who died on July 1st, 3rd, had been permanently disabled on his job and collected the state disability benefit until his death. Mr. and Mrs. Toby received the following in year 3. So he has following income. Both of them have these income like earned income, state disability benefit, interest on refund from amended tax return, saving account and certificates of deposit, municipal bond, pension benefits, and life insurance proceeds. Mrs. Toby received the pension distribution from a qualified pension plan paid for exclusively by her husband's employer. Whereas Mrs. Toby was the beneficiary of the life insurance policy on her husband's life, she received a lump sum distribution. The tops had paid 500 in premium. So during year 3, the following payment were made or losses were incurred. For each of the following items below, select the most appropriate tax treatment using the tax year 2025 rate and rules. A tax treatment may be selected once or more than once. So these are the data given for the taxpayer. So you basically have to determine what should be the proper tax treatment for these of uh, following these expenses and income. So first is premium on Mr. Toby's personal life insurance policy. Okay, so read it once, then try to solve these questions.
Ma'am, can you show the next part?
Yeah, sure.
Ma'am, do we have any options in this or we have to type?
Yeah, we have options. So you do not have to type anything except numbers in the simulations, even in exams. Either you will be given the options or you have to type only the number, not any theory part.
Ma'am, deductible on form 10 for no, sorry, deductible in schedule A itemized deduction.
Are you sure it is a premium on personal life insurance policy?
So, ma'am, 10 form 1040.
Okay, so option C.
Yes, ma'am.
Okay, okay. Let's do the next one. Penalty on Mrs. Tobey's early withdrawal of fund from certificate of deposits. So if you have any savings and you are early withdrawing that savings and have to pay certain penalty, so what do you think whether this penalty will be taken as deduction or not? Or if yes, so under which category? Itemized, adjusted, or other?
Ma'am, not deductible.
Okay. I think you have not revised this topic. You are choosing the wrong answers. Okay, next. Mrs. Tobey's substantiated cash donation to the American Red Cross. So you are making cash donation to a charitable organization.
Ma'am, what is the fourth option?
Okay. Itemized deduction but subject to $10,000 limitation, or itemized deduction subject to 60% of AGI limitation.
Ma'am, schedule A itemized deduction subject to limitation of 60%.
Okay. Next is payment of estimated state income taxes.
Ma'am, options.
Yes. if you have state income taxes. First decide between deductible and non-deductible, then decide between uh, it will be an adjustment or itemized deduction.
No, ma'am, not getting the answer actually.
Okay, so under itemized deduction, you have salt taxes. Remember, you can take up to $10,000 of taxes as an itemized deduction. So this will be correct answer. Okay. So either you can take state and local income taxes as deduction, or you can take state and local sale taxes as deduction. Okay. So you can choose between income or sales taxes, and limitation will be $10,000. So up to $10,000 you can get the deduction in Schedule A as an itemized deduction. Okay. Is it clear or any doubt?
Clear, ma'am.
Okay. These were also wrong. So penalty on early withdrawal of fund from certificate of deposit. So if you have any penalty on early withdrawal of savings, then this penalty you can take as deduction, as an above the line deduction. So it will be deductible on form 1040 to arrive at adjusted gross income. And premium paid on life insurance policies, these are non-deductible. Similarly, if you get any proceed from life insurance policy, then it will be not taxable. Okay.
Yes, ma'am.
Next is payment of real estate tax on Toby's home.
Ma'am, what is the next options?
Yes. Options were same for all.
Okay, ma'am, deductible in Schedule A item as deduction but subject to $10,000.
Okay. So let's do the next one. Loss on sale of family car. So if you have some personal property and you are selling that property and have losses on this property, then it will be deductible or non-deductible.
Ma'am, not deductible.
So personal losses are not allowed. Okay, next is cost in excess of the increase in value of residence for the installation of a stair lift in January of year 3 related directly to Medicare of Mr. Toby prior to his death. So you have certain installment in sorry, taxpayer has certain installment in his house because of some medical like related need. So what do you think, like, if whether this expense will be deductible or not deductible? Certain modification in home or certain addition in the home which is a medical need.
Ma'am, actually, I did not read cost in excess of.
Sorry.
Ma'am, not deductible.
Are you sure? Should I explain?
Yes, ma'am.
Okay. So if you are making certain modification or doing certain addition in your home, which is a medical need, then that expense will be allowed as an itemized deduction. You can claim it as in medical expenses as an itemized deduction, which is subject to 7.5% of threshold limit. Okay. So any answer you want to modify?
No, ma'am.
Okay, so almost we have discussed every question, almost all questions. Okay, so all are correct. Any doubt in this question? If you want an explanation of any question.
No, ma'am.
Okay, okay. So let's do the next simulation. So here you have Steven and Beth Smith have retained you to prepare their year 5 1040 US tax return. Steven and Beth are married and sport Beth's two children from a previous marriage, Terry Jones and Madison Jones. Year 5, Steven and Beth will file jointly and take the standard deduction. They also took the standard deduction for year 4. The exhibit contain a letter from Steven and copies of text form that Steven and Beth received for year 5. So review the client letter documents in the exhibit for each of the reportable item listed in the table and enter the amount of income and deduction that should be reported on the year 5 1040 return in calculating adjusted gross income. So enter all the amount as positive whole values. If response is 0, enter a 0. So here you first have wages, salaries and tips. So what should be the amount you need to report on Form 1040? So here is their data is given. Okay. So first is client letter. So read the client letter. You have here Form W2 frame from this Form 1099, consolidated Form 1099, W2G 1099G. So this is a Form W2 from Mesfit Associates. So Form W2 basically reports the salaries and wages. So it is of Steven Smith and his wages and other compensation is mentioned here. Next, W2 from Framework Corporation. So this is for Beth Smith. So her wages are reported here: Social Security wages, Medicare wages, taxes, or other thing. Next, this is for year 5. Polar for year 5, yes. So this is of Terry Jones. Form 1099, 1099, 1099, or 1099. Okay. So basically, you have to report the item for Steven and Beth Smith. So Steven and Beth are married and sporting 2 children from a previous marriage. So previous one you need not to include like income. So you only have to tell Steven and Beth income. It will be reported on 1040. So first of all, their wages and salaries. So one of the wages are here and other one is here.
But ma'am, how do we have to answer this?
You have to read these exhibits and find out the required question answers of the required questions. So first of all, they are asking you to report W2 wages and salaries. So W2 means whatever the income they are salaries they are getting from their employer. So it is reported on Form W2. So W2 of Both the spouses are given here. So this is for Steven Smith and second one is for Beth Smith. So their wages are given for 32,000 and 75,000. So their combined wages will become 32 plus 75.
1,07,000.
Okay. So next is taxable interest income. So what will be their taxable interest income? So information about interest is given that 1099 interest from Springwell National Bank showing interest and earned on my saving account. So I'll also earn $50 in interest when I cashed in matured EE series US saving bonds. So two types of interest are given. So first is 10 form 1099, which is which the interest you are getting from a bank. Second one interest is getting when they are maturing their EE series US saving bonds. So out of these, what should be the taxable amount? So this is the form for interest.
Ma'am, can you share a screenshot on the WhatsApp group? Because actually my screen is getting blank in between, so I'm not able to see anything.
Okay.
आणि तो दुसरा क्लास किती वाजता
So
लगेच राहील थांबतो
all like of all exhibits.
Ma'am, only the form W2 questions, if you can, I can answer.
And so W2 first question we already did. So I will share you the interest related part.
Can you actually explain me the whole question? Because how to read and from where to pick the things, I'm not able to do that.
Okay. So are you able to see the screen?
Yes, ma'am, now I'm able to.
Okay. So first part is clear or not? Wages
Ma'am,
salary.
first part was clear.
Okay. So in second part, you have to report what should be the taxable interest income. So the interest income they are getting, which should be taxable. So here the interest related information is given here that the form 1099 where interest is reported basically. This interest is coming from Springwell National Bank. Okay, so this interest is they are getting on their saving account. So you basically need to find that whether this interest will be taxable. If yes, then it will be reported in your answer. Next interest they are getting when they cash their mature EE series US saving bonds.
Sorry, ma'am.
Uh, any problem like network issue is there?
Yeah, actually, that's why I'm not. The screen is actually coming and going.
Okay, so then what do you say that we need to discuss or do it in next class? Like if there is more issue, then
Yes, ma'am. This is a very small issue, but
okay. So here you have to report your interest income. So first interest you are getting from a bank. Basically, this interest is on saving account. Second interest is when you are maturing your EE series. So these two interests are given. So first interest is reported on form 1099, which is of amount $100. So here it is given this $100 of interest. Second interest getting on US saving bond and treasury obligation, which is of $50.
ma'am, saving bank interest would be included.
Okay, so what should be the total amount of interest income?
Ma'am, 100 and what was the second interest amount?
एक मिनट ये क्या हो गया? Sorry, your voice is breaking. Can you repeat what you are saying?
Ma'am, only 100, like $100 interest income. Ma'am, actually, can we just do this session tomorrow?
Okay.
Like,
So,
fresh, we will start fresh. So I will check my internet connection also then.
okay. Okay, so we will discuss this topic tomorrow, okay?
Yes.
Next simulation. If
Okay, ma'am.
okay, so nothing more disturbance is there. So okay,
Yes, ma'am.
bye. We will-
Thank you, ma'am. Bye.
त्याच्यासाठी ते बांधून याची नावाची नाही फक्त त्याचं एकच आहे का जसं जास्त काही खर्च करू नका पैसा राहायला पाहिजे सगळं बस एवढं मुंबई तुम्ही त्याला सांगायला लावा सांगा तुम्ही काही आणत नाही तुमच्याकडे काही निघाल तेच म्हटलं तर तुम्हालाच म्हणायचं आनंद आहे आम्ही सांगू भावाचं तुम्हालाच म्हणायचं आणा सांगा ना आम्ही सांगतो सांगते बरं राहते बोला बोला नाही